So the next topic we have is the market sessions. Why I put this topic here on this session actually is because Kyle had his fantastic video. It was really amazing and a cool breakdown. But I also realized as I watched the sessions, well, not realized it's not the correct thing. I remembered when I saw those things the first time that I was actually completely confused about the sessions, especially because all of the different time frames people are living in. And there's so many different definitions of sessions. Of course, it's clear when the market opens and the market closes. There is no confusions about that. But then there's something like London Open, London Kill Zone. Then there is New York Open, New York Kill Zones, and then there is London, New York Overlap, and Asian Range, and whatever. All of those things, and they are not so obvious. And people, especially newbies, and we have a lot of newbies here, because unless order blocks alerts are so simplified that even newbies can afford to trade it. But now we have a lot of newbies who also want to go a little bit deeper and understand all these concepts. And that's why I also said, maybe we should also have a look on these trading sessions. What are those trading sessions? And that you are aware that those sessions are not simple markups on the chart with boxes, which we do, but there's real people working 9 to 5 behind those zones, handing over session informations from London to New York, from New York to Asian, and so on, because they have profit targets they have to meet. And if you consider this, you look at those boxes in a different way, as if you just consider them being indicators for MT4 or for TradingView. And that's why I thought, let's have a look what those sessions actually are. And I tried to make a kind of matrix, for Sydney, Tokyo, London, New York. I just concentrate on those. When the market hours would be for Frankfurt, London, New York, and Sydney. And depending on where you're in, you would mark it up differently. And of course, also depending on your broker time frame, because this makes it a little bit more complicated. Because usually your time frame differs from the broker time frame. So you first calculate your own, then you calculate it back to the broker time frame that it fits, and then you have this winter time, summertime, and so on, which makes it a little bit confusing at the beginning. But once you have it set up, it's set up. And if you struggle with it because you don't know which market currently is opened, then I would propose just have a look at this time zone converter for Forex, and you can switch your own time zone, and then you can see which market at the moment is open and which one is closed, and when did it open and when did it close actually also, which helps you in the beginning to understand in which sessions you're currently in. I know that's not an indicator, but if you want to set up an indicator, you have to be aware of those things. And these things will be available also in the teaching, on the teaching pages, so that you can look them up later on as well. And then there's always the question, so what is the best time to trade? You can Google that and you will get a clear answer, because the best time to trade is London, New York. But is this really something which is the right answer? Well, I doubt it. Of course, in London, New York, for the European and US pairs, you might have the most volume, most volatility, but the best time to trade for you is the time you have backtested for yourself. That's something you have to understand. And even if you ask other people, when do you trade? Because this is usually the question I get, what do you do? And I, of course, can tell you what I do, but it doesn't mean that it fits to your trading plan, because probably you have to get up at the same time, you have to sit in front of the same pair I trade, that you have to consider all the other things I do. It's not helpful just to consider one thing out of the whole concept, doing the same way as I do it. That's I always struggle to directly say what I do, because I want to make you aware I do this, but that might not help you because you might have a complete different approach. Why is that? I will show you later on, because probably you could trade sessions only if you want to. You can trade 1 minute, 5 minutes only if you want to, but you would not probably combine those things automatically. And even, I don't know, does it make sense to trade a JPY pair during a US session or the European session? Not automatically, because depending on the pair you trade, you want to consider the session, of course. And very often I hear that Asian session is just ranging for Euro USD, but if you backtest, you will see there's a lot of huge moves in Asian session as well. So this is not something which is automatically happen, that in Asian session, the price will range. The chart shows something different. And that's just a fact again. If you backtest, you will see yourself. Because price does what price does, and price needs to reach certain zones, and it will do it also in the Asian session. It doesn't know that it should actually range. And of course, if you have trade JPY pairs, you might consider more the Asian session. If you trade odd pairs, you might consider more Australian sessions, but everything goes back to backtesting. And I think you understood the point from this point of view at the moment. And I brought this chart up because I found it was a good example. You have a 15 minutes time frame here, GBP USD, and what you can see, I'm pretty sure there's a lot of things you can see only from market structure point of view, SMC point of view, a lot of breaker structures, a lot of mitigations you can find here. But in fact, you can see here 2 to 3 days of trading. And let's go to the next slide. The question is, would you be able to spot this kind of liquidity grabs, which obviously are, of course, it's mitigations in addition, but I think we can all agree it's also liquidity grabs, and afterwards structure was broken and so on. Would you be able to anticipate that by only looking at the charts, not considering anything else? I don't think so. Of course, you can mark up your zones of interest, but if you would now add additional information to this chart, you would be able to trade completely different. And what I mean by that is, now let's put the sessions on this chart. And this is just the way I put the sessions on the chart. As I said, there's several ways. I don't have the lunchtime break marked up or the session overlap. Also, you can see the Frankfurt session is not marked. I only mark it that way, the Asian range, the London, and the New York session. And now if you have a look at this picture, the whole picture gets a complete different meaning and setup. More advanced traders will already recognize what I mean with this. And the newbies might still think, well, okay, now you have 3 boxes of different color on there. It doesn't say much to me. Now, let's have a look on the next slide. Again, we're talking about this liquidity grab as a first point, because what you can see, you have the Asian session, which is followed by the London Open, who takes out the Asian liquidity, the Asian high, only to drop price within the whole session. And what, let's stick with this for the moment. And this is day 1. You have Asian range, liquidity taken out, price dropping, day 1, because these 3 boxes show day 1. Then you can see day 2, Asian range, liquidity taken out by London Open, price is dropping. Day 2, exactly the same behavior. Those of you who know, who learned ICT, this is very familiar to you, I'm pretty sure. You could only trade this, to be honest. You just wait for this setup. It's not happening every day. Don't get confused by that. But if you backtest it with these boxes, you can see how often it actually happens within a month, for example. And I just wanted to make you aware, if you put additional considerations to your chart, you might look at the complete same picture completely different than you did before. What you also can recognize here is, again, you had your Asian range, the London Open, when London started, it's the 9 to 5 job of those people, taking out Asian range, mitigating a zone of interest, but did not take out the highs here because it was enough for them to take out the Asian range, dropping the price during London, and at New York Open came back up to mitigate those London session supply zone. Well, the price could easily go up here as well. You just have to consider this might be the case. If the people behind those sessions provide you this move down, this is exactly what might happen again. They come back in the New York Open just to mitigate the imbalance they had here, the supply zone, to drop further. Again, if you backtested it that way, it make things more visible to you, because without those things, you would just see a chart. You would not be recognized. Where is London people working? Where is New York people working? What is Asian doing? And who took out what and who returned to when? Was this the mitigation here of London session? No, only by putting additional information consideration on the screen, you will be able to view the same chart in a different way. And if we continue now to day 2, you can see Asian taken out by London Open, price dropped, only for New York Open to mitigate again and to drop further. This was day 2. Usually, or very often, this happens for one day and the second day. Sometimes, of course, it can also look completely different. But I just want to make you aware, this is how you would look at sessions. Of course, first you have to know when the sessions are. It has to be in line with your broker time frame. And then you could decide to only trade a session, for example. One additional thing I want to make you aware of is, well, can you spot the session reversals? Because only if you look at it and if you backtest, you will see that in every session there's reversals. And that's why also the 15M jog trading is usually quite powerful, because you have a reversal in this session, Asian, you have a reversal in this session. Here you had a Frankfurt reversal, you had a London Open reversal, then you had a New York kind of open, it's lunchtime rather, reversal. Then you had a New York Open reversal. This is rather going to New York close and so on. Can you spot that there is 1 to 2 reversals in every session? And if you continue here like this, you can see if you only concentrate on the reversal happening in a session, you can actually, if you can master that, you can make money, but you would not be aware when these reversals might happen, like, London Open, London Kill Zone, if you don't draw the sessions on there when the people are actually working. And that's actually everything I wanted to tell you for today when it comes to market sessions, or what did we call it? Yeah, market sessions, because I don't want to